What is up, everyone? Jaded Blur here. Thanks for watching. I really appreciate you guys. So, 589 rule, 589, a rule, a dollar sign, a date, a number. What is it? What is 589? Well, if we head on over to Bing, we can type in COMEX 589. Look at this. COMEX rule 589. Gold, silver, NYMEX, COMEX. What is this? Implementation of new NYMEX COMEX rule regarding special price fluctuation limits for certain NYMEX and COMEX metals, futures, and options contracts. Effective Sunday, December 21st, 2014, for trade date Monday, December 22nd, 2014, and pending all relevant commodity futures trading. Commission regulatory review periods, the New York Mercantile Exchange, Inc., NYMEX, and Commodity Exchange, Inc., COMEX. Collectively, the exchanges will implement new NYMEX COMEX Rule 589 special price fluctuation limits to apply price fluctuation limits to certain metals, futures, and options contracts. Price fluctuation limits deter sharp price movements that may, for example, be driven by illiquid central limit order books prevailing from time to time in otherwise liquid markets. That is actually insane. What else should I read from here before I move on? That's good enough for now. The phoenix will rebirth from the ashes of the markets. The rise of the phoenix. Remember. Let's go on down. Corner of silver. During the next 2 weeks, as the stock market bubbles will be bursting loudly, speculators at bay will be forced to sell physical gold and silver they had hoarded, waiting for an upside reversal of precious metals. In a few days, the prices of gold and silver will reach their bottom. Gold could drop to $1,000 an ounce. It's currently at $1,800 an ounce. Silver could drop to $12. The goal designated in May by the exit of the trading triangle. No bid. No bid. When all the weak hands have sold their physical silver, no one else will want to sell any ounce of silver. In this case, auctions will rise, and this rise could be extremely brutal. COMEX Rule 589, published in December 2014, provided for this scenario. If the bidding on the silver goes up by $3 without anyone agreeing to sell at this price, the market pauses for 2 minutes. Then the auction resumes. In 10 or 12 minutes, the price can go up to $12. As the daily increase limit is reached, the market will be closed until the following day without any fixing. Without fixing, no one will be able to buy or sell physical silver. The next day, the same price scenario will be in play. The auction will resume in the initial price plus $12. So it closes at $12, then opens with plus $12. So now it's $24 of the day before, and no one wants to sell. The price rises again by $12 to $36. This is how they're going to find a new price for the metals. So it's 12 plus 12 plus 12 plus 12 plus 12 plus 12 until they agree to sell or buy. Let me see. Let's see. Without anyone until they agree to sell. I expect that the bottom of silver will be reached in the last days of November and that the Rule 589 should be applied in the first trading days of December for a vertiginous rise, as no one dares to evoke aloud at what level will this rise stop. No one can say, but at the end of the year will certainly be memorable for those who have accumulated physical silver or XRP, hoping that one day it will become a precious metal, even a monetary one. When all the weak hands have sold their XRP, no one else will want to sell. So when all the weak hands are shaken out, we are currently sitting at $1.49 per XRP token. Per XRP token. So I want you to take a look real quick at Basel 3. I'm sure you've heard of Basel 3. If not, I'm going to show you. Basel 3 rules move physical gold from being considered a tier 3 to a tier 1 asset. Okay? Now, previously, banks could hold gold on their balance sheets in the form of unallocated paper gold contracts without holding physical gold in tangible form. These paper contracts were considered as good as gold. When it came to determining how much capital a bank needed to maintain on its balance sheet, under the old rules, there was little incentive to hold physical gold, as it was only valued at 50% for reserve purposes. Basel III rules move physical gold from being considered a tier 3 asset to being considered a tier 1, which allows physical gold in bullion form to be counted at 100% value for reserve purposes. Gold and unallocated paper contracts will no longer be considered an equal asset. For this reason, banks using paper forms of gold to help meet reserve requirements will have to convert those positions to physical metal. So, if banks want to have everything considered at 100% in price, they need to now hold the physical gold in their banks. All of this is happening. These things, some of these were written on May 2nd, and they're talking about June as a date. Basel 3. March 2nd, beginning in June of 2021, Basel III rules will require banks to hold unencumbered physical gold valued at 100%. June 2021, next month. March 2nd, this was written 2021, last month. Rule COMEX 589. Special price fluctuation limits. This was a rule. The rise of the phoenix. The phoenix will rebirth from the ashes. When all the weak hands have sold their physical silver or XRP, no one else will want to. No one else will want to. Then they will start rising and raising the price and raising it and raising it and raising it until the people start to break and sell. That is when it will stop going up. This is actually insane. What do you all think of this new 589 information? The rise of the phoenix, the Basel III. Banks are going to have to hold physical gold in their banks, no more paper contracts. And one last thing. It is possible to make a payment with gold on the Ripple network. Over the last 3 years, whilst developing the technology, Ripple secured the same asset custodian for gold that is now working with the Canadian Mint and a company called Gold Bullion International, GBI, are already issuing balances on the Ripple ledger. There are also custody assets for Merrill Lynch. Payments and transfers could get very easy very quickly on here, but the more traditional use case is really about moving money cross-border and solving the scalability question for moving funds across border for smaller banks. Then David Schwartz down here, RippleNet is a payment system. It's somewhat analogous to something like Visa. Just like Visa, it doesn't actually move any money. It just records payments and adjusts balances. This is why you have to pay your credit card bill, and Visa has to deposit money in merchants' bank accounts. After a Visa payment, the customer settles with the Visa, and Visa settles with the merchant. The Visa payment system itself doesn't settle. XRP is an asset that can be used for settlement. It's kind of like gold that can instantly teleport around the world. I'm Jada Blur. Please like the video. Please subscribe if you haven't already subscribed. Enable notifications so you know when I go live to be the first to like or watch my videos. And always definitely leave a comment on this one, because I got up at 2 in the morning to make this video after getting all this information for all of you. Until next time, we'll put out some more videos. Later.